All right, so hopefully you guys have your notepad right next to you. So I just want you guys to write down whatever I'm going to be typing it in here, all right? First thing what we're going to talk about is fairly simple. So you know when you want to trade S&P 500 or NASDAQ with shares, the ticker symbol for trading those is SPY and QQQ, correct? So if you go to SPY, you know it's S&P 500. And if you go to QQQ, that is NASDAQ. And there is the bigger version of SPY, which is what? SPX, right? SPX is more expensive, but it's a bigger version of SPY. And similar to that, there is NDX, which is like the bigger version of QQQ as well. So similar to that, futures contracts can be split in two, by the way. Similarly, how there is SPY and SPX and QQQ and NDX, similar to that, there are two types of contracts when it comes to futures. Number one is mini contracts, and number two is micro contracts. All right. So two different types, mini and micro. I just typed it in my screen. You can see it right there. All right. So the mini contracts are equivalent to SPX or NDX, by the way. So these are big boy contracts. And micro contracts, which you see, those are like SPY and QQQ. Smaller version of it. All right. So these are the two types of contracts you will be dealing with across the board. It doesn't matter what you trade. It doesn't matter what you do. So these are the two types of contracts you will be dealing with. All right. That's number one. And the next most common question which we get is, when can you trade this? Right? What time? How does the timing works? Because when it comes to stock market, you know the regular market sessions opens at 9:30 a.m. EST and all the way closes at 4 p.m. EST. Correct? So what about futures? How does the futures work? So futures, write it down when it comes to the futures. What the hell? There we go. We open at 6 p.m. EST every evening, and we close at 5 p.m. EST the next day. And this will be open the entire night as well. So let's say you are working 9 to 5, and pretty sure there are times where you face like, I've been busy with work, I couldn't take it scenario. So you don't even have to focus on the markets when you're working. What you can do is you can just come back home, relax for a bit, open up the markets at around like 8 o'clock, or maybe even wake up a little bit early, like around 3 a.m. in the morning. You can just trade S&P 500 and NASDAQ at 3 a.m. in the morning if you want to, by the way. All right, so you can trade it at 3 a.m. in the morning. You can trade it at 1 a.m. in the morning or 8 p.m. in the evening. It opens at 6 p.m. EST and closes at 5 p.m. EST the next day. So how it typically works, as soon as the Sunday 6 p.m. hits in the evening, the futures markets open. And they go all the way to Monday evening, 5 p.m. And then you get a 1 hour rest, and the cycle continues again until Friday evening, 5 o'clock, by the way. It's the same thing over and over and over again. So what did we talk about so far? There are two types of contracts when it comes to futures. One is mini contracts. The next is micro contracts. Whatever you trade, it's going to be within these two. It's not more complicated than this. It's as simple as it gets. One is mini, one is micro. So when it comes to the timings, the futures markets opens at 6 p.m. and it goes all the way to like the next day, 5 p.m., by the way. All right. So for example, when the Sunday happens in 2 days from now, the markets open at 6 p.m. EST on Sunday. You can just start trading at 6 p.m. on a Sunday evening, by the way. You don't have to wait until Monday morning. And you can just trade it all the way to like 5 p.m. All right. Are we clear so far? Any questions until now? You guys with me? We good?
Yes.
All righty.
What would be the best
Yeah,
time
we
for
good. We good.
Yeah, go ahead.
what would be the best time to trade for someone that working?
Yeah,
I know
we'll
that you said that it's open from Sunday 6
Mhm.
p.m. to Friday 5 p.m. So what would be the best time?
Yeah, we will talk about it in the next topic, right? Because
Okay.
different, like we're going when we discuss about like when different markets across the world opens, you're gonna get an idea on when you're gonna get that volatility inside for you to trade. So we'll discuss it next. So if you guys know, every country out there has a stock market of its own, correct? If you go to Europe, you got London, they have their own stock market. Germany have their own stock market. Italy, France, they all have their own stock market. Now, if you go to Asia, you see Japan, Hong Kong, India, and then there's you don't care much about Russia in the not big influence, but you got Taiwan. All these countries have markets of their own, right? The beauty about it is each markets have their own time. But what we mostly care about is this European markets and the South, it's not South Asian, the Asian markets in general, mostly Japan and China. All right. So I'm just going to type in the timing for you guys to keep an eye out for. Japan, China opens at 8 p.m. EST, by the way. This is at night time. 8 p.m. EST is when the Japanese, Chinese markets, Hong Kong, majority of the Asian markets open up. 8 p.m. EST, all right? And then when we go to Euro, or we call it London Open, is what they call it. If it's before time change, it's going to be 3 a.m. EST. And once the time is changed, it's going to be 2 a.m. EST, by the way. As of right now, it's at 3 a.m. EST is when the European markets open, which is London, France, Germany, and Italy, in all these other European countries. Majority of them opens at 3 a.m. EST before the time change and 2 a.m. EST after the time change. All right. So as of right now, we are opening this at 3 a.m. by the way. And when does our pre-market opens on our stock market, by the way, in US? 4 a.m. EST, correct? That's when our pre-market opens up. Okay, so when your question is what might be the good time to trade, typically from 6 p.m. to 8 p.m., most of the time it'll be like watching paint dry. So leave the markets alone because like the pre-market, the after hours is still open for us in the stock market until 8 o'clock, correct? Once the 8 o'clock our market closes, you're going to get that first set of volatility into the markets, by the way, at around 8 p.m. EST. You're going to get some sort of volatility into the futures at 8 p.m. You can either pick this time slot to trade the Asian markets. All right. You will be trading S&P 500 and NASDAQ anyway. You're just going to get that volatility spike at 8 p.m. EST, number one. Or let's say you just want to chill in the evening and you don't want to look into the markets around that time. Let's say you are an early riser, right? You wake up early in the morning, 3 a.m. in the morning. You can trade the Europe Opens. The Europe Open is much more volatile compared to that of Japanese and Chinese markets. If you're scalping, this is a really, really great time to trade, by the way. 3 a.m. to 4 a.m. By the time, like by 4:15 maximum, you will be done. So you're going to get one set of volatility at 3 a.m. EST, and you're going to get that second set of volatility at 4 a.m. EST when our pre-market opens. And you will be done for the day before like 4:15 to 4:30 in the morning, that is. And then after that, you can just put in a small sleep and then get back to work, focus on the job, come back the next day, repeat the cycle again. So it gives you the freedom to do whatever the hell you want to do and whenever the hell you want to do when it comes to trading. And that is the main advantage when it comes to futures. All right. So to answer the question, 8 p.m. or 3 a.m. or 4 a.m., any time slot works. Go ahead, Chris. What were you about to ask?
How do you know for certain that like the volatility is consistent or persistent during those times? Is it because of the volatility when those other markets open?
Yes. So because when the other markets open, you're going to get a huge surge of volume flowing into our markets as well, right? So 8 o'clock, you're going to get that initial spike, either to the upside or to the downside, depending on the price action. But you're going to get that spike up or spike down after 8. And same with 3 o'clock when the Europe opens, there's going to be a lot of inflow into our markets as well when their markets open from a liquidity standpoint. So you're going to get that spike. When I say spike, I'm not talking about like 100-point or 200-point spike. Like you're going to get some sort of increased volatility during these times, which is worth taking the trade into. All right. So don't be involved as soon as 3 o'clock. I want to click buttons. Not like that. Wait for a setup. And at 3 o'clock, as soon as it hits, you're going to get that volatility more so that you can make your money quick and be done with it. So it's all about liquidity. You're going to get more liquidity injected into the markets, which causes more volatility down the line, sort of deal. Are we clear with the timing? Did you guys write it down? Can we move on to the next one? We good? Let me know if you have any questions and stop me if you don't understand anything on what's been discussed. We're more than happy to answer. We good? Perfecto. All right. So
let me. I got.
Yeah, go
Let
ahead,
me ask a
Chris.
quick question. I'm
Go
sorry. I
ahead.
just wanted to ask. So on Friday at 8 when it closes, and it's closed Saturday and Sunday.
Oh, no.
Sunday.
Friday it closed at 5 p.m. by the way.
Okay, so we closed
So we
Friday at
close at
5.
Friday at 5, and then we open back up on Sunday, 6 p.m. EST.
Okay. When it comes to futures, can you hold during that period, or are you typically out during that period?
I mean, you can swing trade it as well. There's nothing wrong with it. It's just like you holding on to an option to the weekend, right? It's similar to that. You can swing trade futures too. It's not like you can only day trade them as well. You can swing trade them as well. But the margin requirements is going to be a bit different. We'll talk about it down the line when we discuss the margins. All right.
But
So
no Greeks, right?
nope. Yeah, we'll
No
discuss all
decay.
that. Yeah, we'll discuss all that down the line. To answer your question in a brief way, no, you don't have to worry about none of that nonsense.
Okay.
Yeah, we'll discuss it more. All right. So now, how will you trade this? Right now, like there are two different types of contracts. When the markets open, when the markets close. When the different markets open up across the world. Now, what are the different types of contracts you can trade with? All right. So let's start with S&P 500. All right. So write it down. The first one for S&P 500, the mini contracts is called ES, E-mini S&P 500. And for micro, we call it MES. M stands for micro. All right. And for NASDAQ, we call it, for mini, we call it NQ. And for micro, we call it MNQ. All right. And for, let's say, for gold, for mini, it's GC. And for micro, it's MGC. All right. And for oil, mini is CL. And micro is MCL. All right. So these are the most 4 traded commodities out there anyway. All right. So you can trade anything, by the way. Like if you want to trade the futures on orange juice, you can trade that as well. If you want to trade the futures on soybeans, well, you can do that too. And there is the futures for wheat. There is the futures markets for, like, let's say if you want to trade silver, you can trade silver too. Let me put it in as here as well. I wouldn't recommend trading silver though. It's way too expensive to deal with. S mini, it's SI, and for micro, it's SIL. A tad bit different to the other templates that you have. So this is for silver, and this is the ticker symbols which you need to be looking out for. All right, take a screenshot of it, write it down. It is going to be coming in handy for you guys down the line. All right, so now let's discuss about how these contracts move, and let's discuss about margins a little bit. All right, so each contracts have a margin value of their own, by the way. So just like how you see, like, SPY options cost something completely different than that of the Tesla's option chains, and Tesla option chains cost completely different to NVIDIA option chains, and so on. Similar to that, the cost is going to be different for each of these instruments, by the way. And how you pay for it is going to be completely different to how you pay for with regular options. All right, let me give you an example. Let's say you are trading with a $5,000 account. All right. So if you want to buy a call option on SPY and it's costing you $300, how does the process typically work? So you go to the option chains, you see a call option on SPY, and you click on buy, and then you see the price is at $300, and you send the order in, and they're going to take $300 from your buying power, and it's over, right? But when it comes to the futures, it's completely different. It operates on something called as margins. Margins, right? So how does this margin work? So if you're trading through the brokerage called TradeAway, these are the margin requirements for TradeAway, by the way. For ES, for S&P 500, for ES, it's $500 requirement in margin. And for MES, it's $50 requirement in margin. All right. So what does it actually mean? So let's say with a $5,000 account, you open one contract of ES, which is margin of $500, correct? Margins of $500. So as soon as you open it, they're not going to take away $500 from your buying power, by the way. So this margin value is telling you how much your account size need to be above at all times in order for you to keep holding on towards this position. So let's say you open this trade and then S&P 500 starts dropping and you keep losing money and this $5,000 becomes $4,000, this $4,000 becomes $2,000, this $2,000 becomes $100, 900, it goes down to 600, and then the second it goes down to 500 to 499, it got lower to your margin requirements and they are going to liquidate your entire portfolio. So in order for you to keep holding on towards this position, your account size needs to be above 500 at all times. So what's going to happen if you buy two contracts of ES? Your margin requirements goes up to $1,000. So at all times when you're holding on towards this position, your account size needs to be above $1,000. Let's say you buy two contracts of ES and your account size drops to 3,000. Your account size drops to 2,000, 1,500, 1,250, 1,100. And by the time it drops under $1,000 mark, your account is liquidated. They're going to close all your position because you don't have enough margin to keep holding on to your positions, and they are going to liquidate your entire account. Now, do you guys have an idea on how these margins work in general? Because it's not like you pay up front to open a position like calls and puts. Everything is dealt in margin basis. All right. So if you have a $5,000 account, if you're looking to buy two contracts of ES, the margin is around $1,000. So now if you notice, different brokers will have different margins, by the way. So if you're using Robinhood, the margin values are going to be completely different. So the margin value is telling you at what your portfolio value should be at all times in order for you to keep holding on towards this position if you don't want to get liquidated. Some brokerages like Robinhood has a margin value of like somewhere around $30,000. So you need to keep your account about $30,000 at all times if you want to keep holding on towards that position, by the way. So different brokers have different margins. When it comes to TradeAway, it's $500 in margin for ES and $50 in margin for MES, by the way. Are we clear right now on how these margins work when it comes to buying a contract?
Yes, could you put the trading brokers that you're saying? Could you just drop it in the chat for me?
Will do. TradeAway. TradeAway, or you can also check Ninja Trader. But if you're completely new, I would just stick to TradeAway because for me, when I started out with futures, it took me almost like 3 days to get used to Ninja Trader, by the way. It was a pain in the ass to deal with when I opened it, but TradeAway is fairly simple. You can give that a try. How are futures different from stocks? We'll discuss about it more down the line. Now we'll answer this question. Why should we consider futures? It's not one better than other, but it has its advantages if you know to trade more. You have a lot of advantages if you can trade more, but from a hedging standpoint or from a protection standpoint. All right, so any questions so far on how these margins work, by the way? Do you guys have an idea now on how this works? If you don't understand it, unmute yourself and ask right away. That's way better than sitting with a little bit of a confusion, because this is very important. We good?
Good.
Perfect. TradeAway has less of a learning curve. Yes, it does. It's easy to get used to. It's just like any other app, any other trading app. It's not as complicated. It's very easy for beginners as well, so you can consider it. But again, I will tell you how to trade it, but you can still open a trading account with TradeAway for now, but don't put any money into it yet. I'll tell you how to trade futures by the end of this class. You'll have an idea. All right. So now we got mini and micros, we got stock market, what's the time it opens, we got when they open at, and you see the different ticker symbols to look forward to, and we got S&P 500, NASDAQ, gold, oil, silver, and much, much more out there. These are just some of the most traded symbols in the markets, liquid symbols in the markets. And we discussed briefly on how the margins work. All right. So now, what are the advantages of day trading futures compared to that of options, right? Futures versus options. It's always something. When it comes to scalping in particular. All right. So when you're day trading options, what are the problems you guys typically faced? So like, let's say you're looking to buy an option or you're holding on to an option. What are the challenges you face, especially as a new trader looking at these option chains? Is there anything which made you go like, God damn it, I don't understand anything what's going on in here? Maybe we can say it's options Greeks, correct? The Greeks can be very complicated for a beginner to look into. Strike selection, you have to look into which expiration date you should be picking up. And you have to look into whether you're buying in the money or at the money or out of the money. And you have to look into your stop loss setting, because if you don't set, even if you set your stop loss, sometimes it just blow right past it. You can't do OCO orders, right? Like you can't set both stop loss and both profit taking targets at the same time. And you need to make sure that the position works out in your favor before your contract expires, or else that thing is going down the dirt. A lot of these complications, right? A lot of math is involved. But when it comes to futures, it's purely directional. There is no Greeks. There's no reason to worry about the delta. There's no reason to worry about theta. None of that nonsense. There is no Greeks. And there is no there's no in the money, at the money. There's no strike prices in general. There's no strike prices. There's no Greeks. And there's no like, we do have expiration date with futures, but it works completely different. There's no option style expiration dates. And they are purely directional in nature. What I mean by that is you can only take two types of trades when it comes to futures. All right? Just two types. Not types. You are either long or you're short. All right? So long is equivalent to you buying call option, and short is equivalent to you buying put options. If you're bullish, you go long, and if the stock price moves up further to the upside from your entry, you're going to be making money. If it doesn't, and if it pulls back, you're going to be losing money. And for the shorts, if it goes down from your entry, you're going to be making money. And if it continues to go up from your entry, you're going to be losing money. Those are the only two types. If you get the direction right, take it to the bank. If you get the direction wrong, you're going to be losing money. As simple as it gets. All right, so number one is long, L-O-N-G, and number two is short, S-H-O-R-T. Long means you're bullish on the markets, and short means you're bearish on the markets. All right, just two types. That's it, as simple as it gets. All right, so what about the money part, right? That's the next one. Like, how do I know how much money I'll be making or losing for each contract? This is where we're going to be discussing from ticker symbol to ticker symbol right here. All right. So let's start with S&P 500. I'm pretty sure most of you in here traded SPY, correct? Most of you in here traded SPY so far. Let's start with it. Let's start with the equivalent. MES and ES. So what's MES and ES? It's the micro and mini contracts for S&P 500. All right. So if you look at right here, the MES is currently, or ES is currently trading at 7435, by the way. I'm just going to write in the price here so that it's easier to understand, 7435. So this is the current price for MES and ES. Both MES and ES has the same price point. So it's the same chart anyway. So you don't have to worry about it. All right. It's just how much money you make is going to be a bit different. Let's say you buy one contract of MES for long, for this example. All right. And your entry is at 7435. Okay. So you're entering it at 7435 with one contract of MES, which is a micro contract. So let's say if the same entry, the same futures contracts go up to like 7436. So it went 1 point above your entry price, correct? So for every point it goes up, for every point, by the way, every single point it goes up, you will be making $5 each. You're going to be making $5 for every point it goes in your favor, or you're going to be losing $5 for every point it goes against you. So let's say if you enter at 7435 and it goes to 7434 or 7433 and so on to the downside, you're going to be losing $5 because in this example, you're long. If you're long, what needs to happen? You need to be bullish, right? The stock needs to continue to keep pushing higher. So if you're trading with the MES, for every point it goes to the upside, you're going to be making $5, and every point it goes against you, you're going to be losing $5. So here's a quick exercise, all right? So let's say your profit-taking target on the same thing is at 74.45, all right? And your stop loss is at 74.25, all right? So if you're wrong, how much you'll be making, and if you're right, how much if you're wrong, how much you'll be losing, and if you're right, how much you'll be making in dollar terms. So the profit-taking targets is 74.45, stop loss is 74.25, and your entry is 74.35, by the way. For each dollar it goes in your favor, you'll be making or losing $5. So walk me through it.
$50.
Yep, for both. So $50 for both profit taking and the stop loss.
Correct.
There you go. Bingo. So how did you get that $50 is the question. Like, it's fairly simple. For every point you make $5. So if you're setting your profit taking targets 10 points from your entry, you're going to be making $50, correct? Because it went up 10 points, 5 times 10, you're going to get 50. And if it goes against you 10 points from your entry, you're going to be losing $50. So did you notice something here? Before you click on that buy button, you exactly know how much you'll be making, and you exactly know how much you'll be losing. And When it comes to futures, stop loss works 100% of the time. Profit-taking targets works 100% of the time, by the way, unlike options. So it's going to give you that grip on your position sizing and proper idea on how much you'll be making or losing, unlike doing all these mental gymnastics with delta. All right, so here's another example, another exercise more or less. All right, so if you don't understand this, let me know. Let's say your entry is, let's keep it at 74.35. All right, so your stop loss is at around 74.20. And your profit taking target is at 74.65. So what is the risk? How much you will lose if you're wrong, and how much you'll be making if you're right?
$75.
That's for the stop loss, correct? What about the profit taking targets? 75 for the stop loss. If you're wrong, you'll lose 75. And if you're right, how much you'll be making? The profit taking target is a 74.65, by the way. So it's $5 a point. So you're going to be looking to make somewhere around
125.
150.
Oh,
Yeah, it's $30, correct? 30 times
right.
5, you're going to get around $150. So with this trade, you are risking $75 to make $150, right? When you're talking about risk to reward ratio, this is a 1:2 risk to reward ratio because you're risking 75 to make 150. So this is what we call as a 1:2 risk to reward ratio, by the way. All right, so now you can see how easy it gets. You exactly know how much you'll be making or how much you'll be losing just by looking at your entries and exit. Don't worry, you can automate everything. Like you can just create a bracket order and everything is going to be handled for you automatically. All right, so as of right now, go ahead, Sharon.
I'm a little lost. Go back over that one again. I was trying to do the math quick, but do the
Okay.
math again.
So I just want you to write down this, all right? So when you're trading MES, the micro version of S&P 500, for every point it goes in your favor, you will be making $5 each. For every point it goes against you, you will be losing $5 each.
Okay.
All right. So now in this exercise, your entry was at 74.35.
Mm-hmm.
And you're longing this. If you're longing this, which means you're bullish, you want that MES to go higher. All right. So you're setting your stop losses at 74.20, which is $15 from your entry to the downside.
Right.
And you're setting your profit taking targets at 74.65, which is 30 points from your entry to the upside.
Okay.
All right. So if you're making $5 for every point it goes in your favor, you will be losing $75 if you're wrong, because if it goes down $15, you will lose $75 because you're making or losing $5 each point. It's 5 times 15.
Gotcha. Mm-hmm.
All right. So if it goes in your favor, it's 5 times 30, which is $150. So you're risking
Gotcha.
75 to make 150 on this trade. And trust me, the second it hits that $75, you're going to get kicked out exactly for that 75. And the second it hits that 150, you're going to get kicked out exactly at 150 as well. Automatically. You can just open your position and go on with your business. You don't even have to keep staring at your screen either.
Gotcha.
All right?
Understand.
Yep.
Yes.
So are we clear so far on how this ES works? Any questions? Any more questions?
When you say it automatically sets the stop loss and profit taking, are you just saying like it's easier to set those parameters when you buy it?
I'll show you right now. All right. So let's see. This is the chart for MES, by the way. All right. This is the chart for MES. And our markets today opened at 9:30, right? So we will take the same exact trade which we took today with SPY in today's morning live stream. All right. So we're gonna remove all of this in here. Let's remove off everything, start new. I believe we entered somewhere around, where's the 9:30? Right here, right? This is where we entered. Let me just fire up my paper trading. Right, so there you go.
Are you using TraderVate right now?
Oh, this is trading view, by the way. So this is just to show you how it works technically. All right. So our entry price, let me just play it. This is a paper trading tool on TradingView. You can practice this weekend using the same, by the way. So we entered somewhere around right here when they pulled back. Hold on. When did we enter this? Yeah, right here is where our entry was. Oh, it went on further. Let's push it back. Let's cut this. Yeah, when this candle happened is when our entry was taken. Let's just do a market buy. And in this case, we're just going to go with 1. Our stop losses was set right here, 73.80s. All right, we're just going to set our stop losses right here at 73.80. Wait, 73.80. Yeah, correct. And we're going to set our profit taking targets at around the 74.23.
Does the order ticket format look similar to this in TraderVate, like how it has take profit?
It's exactly the same.
Okay.
It's exactly the same. All right. So let's click on the buy. All right. So now we can just drag and see how, oh, I should have enabled this, my bad. Let me close this and let me just enable this again. And let me just click on buy. Let me play it. So this is to show you how there you go. All right. So the price went from 74.01 to 74.7417. That's almost like a 16-point move to the upside. So you can see we just made $80 in here. All right, so I'm just looking into why it doesn't allow me to set the profit-taking targets in here, though. Let me figure this shit out. Let's see, let's do a limit. Oh, right here. There you go. So our take profit target is right here, and our stop loss is right here. All right. So in this trade, let's just click on buy. Let's just drop it down. And let's just drag it up right here. All right. So in this case, if you're right, you'll be making $120. And if you're wrong, you'll be losing how much? $103 each. All right. So let's just see what happens as the trade continues, right? So as they continue to rip through, once it hits the profit-taking targets, just notice what happened. The trade was closed automatically. You don't even have to do anything. So you just open the trade, set your profit-taking targets, and set your stop loss and let the position do the work for you. All right, so this is the exact trade which we took with the options contracts, by the way, in the morning with SPY. So if you traded the same with SPY, you would have gotten the calls on SPY when they broke about the VWAP in the morning, and then you just took it all the way towards that 740 area on SPY. That's 738 to 740. So you can see how easy this becomes. You don't have to question yourself like, oh, should I be buying? What strike price should I be buying? What expiration should I be buying? None of it. You just click on buy and put your stop loss and set your profit-taking targets and then let the position do the work for you. As simple as it gets. And with this one trade, you just made $117, by the way. $117, and you are done for the day overall. So that $117, 1, 2, 3, 4, 5, 6, 7, came by in 7 minutes. And you just opened the trade and you walked away for 7 minutes. You came back out to see it's at $117 profit and you're done. And this is with one contract of MAS, by the way.
Can
All right.
you move up? Can you move up your stop loss line anytime?
Oh yeah, you can move your stop loss up anytime you want. So let me show you exactly how you can do it. All right, so let's go back and let's run it up again. All right, so let's say our stop loss is right here, and our take profits is somewhere around right here. All right, so let me just click on buy. Oh, no. Let's remove this. We don't need this. All right, so let's just play it. Let's see how it plays out. So you can move your stop loss just like what I'm doing right here. Anytime you want, you can just move it, or you can move it down, or do whatever you want with it when you're in the position. It's as simple as it gets. So right here, you can see I can move my stop losses down if I want to, or I can move it up if I want to. It's completely in my control. Or if I want to move down the profit-taking targets, I can do that as well. Or if I want to move up my profit-taking targets, I can do that as well. You have the flexibility to do so. There you go. The profit-taking targets is hit, and it just sold me automatically. So this trade gave you $146 overall. All right, so this is the TradingView's paper trading tool, by the way. You can look into it. You can see it right here from the paper trading options. This is just to show you how these future contracts on MES in particular works. Are we clear on this one, by the way? How the money-making things work, and like how does it move in general, and all those other questions. We good?
Yes.
All right, perfecto. So anyone else have any other questions before we move on to NASDAQ, or before we move on to the mini version of the same? All right, so let's move on to the mini. Hey, where are my notes? There you are. So let's talk about the minis now. What we discussed until now is micros. All right. So what does the micro means? Now, as I said earlier, minis are big boy contracts, by the way. How micros are smaller version, minis are the bigger version of the same. For the only difference between the micros and mini is the margins. All right. So for micros, for every contract, you need a margin of just $50, by the way, per contract. You just need to have $50 in your buying power per contract if you're going to be trading with the micro version. But if you're going to be trading with the mini version, the margin gets towards that $500 mark. For micro, it's just $50 per contract when it comes to the margin. All right. So now for every dollar it goes in your favor, instead of that $5, you're going to be making or losing $50 each. This is for mini, by the way. The mini, the ticker symbol which you're looking for is ES. For micro, it's MES. For ES, you're going to be making or losing $50 for each point move, or you're going to be losing $50. Now, do the same math here. Same exercise, right? But instead of $5, you're going to be calculating the same for 50, right? So instead of risking just 75 with this trade, you're going to be risking $750 to make $1,500, by the way. So you can see how your risk just went up 10-fold here when you're trading with mini instead of comparing it with micros. A lot of new traders look at this and go, oh, I can make like $1,500 by risking $750. I can make a lot of money in a short period of time. And then they blow up their accounts, and one bad trade, their account is wiped through the floor. So if you're new, avoid minis like a plague, especially if you're dealing with like a $2,000 or $5,000 accounts. You cannot trade mini anyway. Your risk won't allow it. So leave that part alone altogether. But it's nothing wrong in understanding how this typically works. So for micros, you're going to be making or losing $5 per point when it comes to S&P 500. And for mini, you're going to be making or losing $50 per point when it comes to trading S&P 500, by the way. It's 10 times that of micros, simple as that. When you're talking about mini, it's always 10 times what you make in micros. And same with margin as well, always 10 times the margin too. Are we clear on how S&P 500 can be traded using futures? Purely directional, number one. And number two, you don't have to worry about the Greeks. You don't have to worry about the delta. You don't have to worry about any of that nonsense. You don't have to worry about expiration date. If you want to pick in the money strike price or at the money strike price, strike selection goes off the window. All you need to be right about is the direction. You'll be making money. If you're wrong about your direction, you're going to be losing money. And how much you're going to be losing is going to be determined on whether you're getting a mini contract or micro contract. For micros, when it comes to S&P 500, you will be making or losing $5 for each point. And for mini, you'll be making or losing $50 for each point. If you take the same trade today on SPY as we took in the session with the minis, that was somewhere around like $1,300 to $1,400 trade by risking around $900, by the way. Now, if you trade the same with micros, you risk $90 to make $145 to the upside. 90 risk on micro, 900 risk on mini. But the charts are the same, they move the same, there's no big difference. All right, so before we move to the NASDAQ, any questions so far on S&P 500 and the futures in general? What have we covered so far? If you have any questions, feel free. Perfect. So now let's move on to the next big boy on the list. QQQ version. In other words, NASDAQ. So if you're interested in trading QQQ instead of SPY, you can trade the same version through futures as well. The ticker symbol which you need to be looking for is NQ or MNQ. Simple as that. All right. So two different types of contracts, right? Let's talk about micros in general. So when it comes to S&P 500, how much money you made or lose per contract? It's $5, correct? But when it comes to NASDAQ, the current price for NASDAQ for NQ is currently at 29,662. All right. So for each point, it works in your favor. For micros, for each point, you're going to be making or losing $2, by the way. Instead of 5, with this one, it's just $2 per point. If you're right on your long, you're going to be making $2. If you're wrong, you're going to be losing $2. All right. Here's an example. All right. Let's say the entry is at 29,662. If you have a notepad, write this down. And if you have a stop loss, you're setting your stop loss at, let's say, 15 points from your entry. 29,647. All right, that's your stop loss, and your profit taking targets is 30 points from your entry, 29,692. All right, so let me just move this up a little bit. There you go. So now, if the price drops 15 points from your entry, you're wrong, you're going to cut it for a small loss. If it goes up 30 points from your entry, you're going to cut it off for a small chunk change for profits as well. All right. So my question will be, since you're making $2 for each point, how much will you lose if you get stopped out, and how much will you make if you get kicked out for profits, right? So since it's 15 points on the stops, you're going to be risking $30 per trade on this one. And since your profit taking targets is at 30 points, you're risking $30 to make $60 on this trade. All right, because you're only making or losing $2 for every point it goes in your favor or it goes against you, by the way. Unlike the $5 on S&P 500, which we discussed earlier. Right? Are we clear? So this is for micros on NASDAQ. So when you talk about the margins right now, how much margin you need to have in your buying power? When it comes to ES, it was $50, right? But when it comes to NASDAQ, it is $100 margin. So you need to have at least $100 in your buying power in order to open one contract of MNQ. So now when you go to the mini version of the same, for each point, it's going to be $20 each instead of 2. Again, always multiply this shit by 10. You're going to get the mini values as well. So now if you exercise, we do the same exercise which is given right here with the mini version, you will be risking $300 with the stop loss. And you will be looking to make $600 in profits. So risking $300 to make $600 on the trade. All right, so the margin requirements, well, drum roll, multiplied by $10,000. You need to have a minimum of $1,000 in your buying power at all time if you want to keep holding on towards this position. All right, so this is for NASDAQ. So any questions, feel free to ask so far.
So I'm sorry, but as far as basically I should just be focusing on micros.
Correct.
And the micros is NQ and ES.
MNQ and MES.
Oh, MNQ and MNS. Okay.
Yep, there's always an M in front of it. MNQ, MES. So we'll only focus on micros. Don't touch minis. I mean, maybe once you get your account size to like 25,000 or 30,000, then you can look into trading like one mini. But at that time, you'll be just trading like 10 MNQs anyway. It's equivalent to one mini at the end. So it doesn't really matter after that. All right. So are you guys ready for some quick exercise when it comes to NQ? Feel free to do it and let me know the answer. So here's the exercise. If you have the bookmark or if you have a notepad right next to you, do it. So your entry is 29,660 with this case. Your stop loss is 29,640. And your profit taking targets is 29,700. All right. So you are buying 2 MNQ contracts here, by the way. 2 MNQ contracts. Let me know how much you make and how much you lose if you're wrong. And do the same with 2 NQ as well and get me the answer for the same too. I'm just going to copy paste it in the Zoom chat so you can see the question more clearly than what you see on my screen. Hold on a minute. There you go. Should be in the Zoom chat for you. And here's the hint if you are confused. I'm just going to zoom in on this one so you can see it on the screen. Let me know when you guys are done. You can just post your answers in the Zoom chat or unmute yourself and let me know the answers. You're having 2 contracts here, by the way, not 1. You guys got the answer? We good?
Mario, can you give me those numbers again? Because I'm driving, so I'm going to pull over so you can give me the numbers.
Oh, no. Keep driving. I'm just going to walk you through it. Don't stop for this.
No, that's what I say. I was going to pull over so you can give me the numbers
Oh,
for the
no.
guy.
All right. So you can do a mental math while driving as well. Like it's 29,660 for entry
Uh-huh.
and 29,640 for stop loss. $20 from your entry is the stop loss.
Okay.
And profit taking targets is $40 from your entry.
80? Hold on. Oh, okay, grandma's on. No problem.
$80 and $160. That is for MNQ. What about for NQ? That's the right answer for MNQ, by the way. So you will be losing $80 if you're wrong, because you're having two contracts. So you'll be technically making or losing $4 per point move. Since you have a $20 stop loss, you're going to be losing $80 per point, and you'll be making $160 if it goes up $40 from your entry price. And when it comes to NQ, just multiply this shit with 10. Like you're going to be risking $800 to make $1,600 in profits. All right, as simple as it goes. So I'm just going to post the answers. Let me know if you had any struggle calculating the same. For MNQ, stop loss will be $80. Profit targets 160. And for NQ, stop loss will be $800. And the profit taking targets will be 1,600. All right, so that's the answer for the exercise which was given. If you are struggling to do this, I'll walk you through a real example. All right, let's start with MNQ first. If you go to TradingView and just type MNQ, the first one, micro E-mini NASDAQ futures, just click on that. All right, so let's go over today's chart and then we can just deal with it from there on, right? So let's select the bar. Go all the way to the 930 candle right here. All right, so let's say this is where we enter the trade. All right, we're going to apply the same exact thing right here, by the way. We're going to set our stop losses 40 points from our entry, which is right here. And we're going to set our profit taking targets all the way down to 25 points from the entry price. Just $40. There we go. All right. So since we are having two contracts instead of one, so it's going to be around $80 more or less. Let's just flip it to 80 exactly. I'm just going to leave it at 81. You know what I mean. It's more or less the same thing. All right. So around $83 you're risking, because your entry in this case is 29.31. And your profit taking targets is 40 points from your entry. You got two contracts, so it's $160 in returns. And your stop loss is at around $83 because it's $25 from your entry price. All right, so let's just click on buy and then let's see what happened. Oh, hold on. Let's just type it in. Ah, God damn it, it just flew past. Anyway, so here's another example, right? This thing went from 350 all the way towards 442s. All right. And that move happened in like the next 2-minute candle, by the way. So that was almost like a 100-point move to the upside. And you can see immediately just by using two micro contracts, how much this position was up. And that happened in like 2 minutes. And if you took the same trade with minis, that's $3,670 in profits in 2 minutes, by the way. All right, so I'm just going to play it out so that you can see exactly like how these contracts move. And I'm going to pause it right here, and you can see it went as high as 505, which is somewhere around like $150 from your entry at one point. You're up almost like $500 in literally like 4 to 5 minutes, and you can just close it, call it off for the day, and be done with it. $500 in like 5 minutes, fantastic, right? So this is the entire point of it. So if we just go back and if you set your profit taking targets and the stop loss before, so let's say I do buy the same exact thing right here with a limit buy, and I click on stop loss and the profit taking targets, and then I click on buy right here. If I set my TP somewhere around that 530 zone, and if I set my stop loss right here somewhere around this lows, $200. So in this case, I'm risking somewhere around $200 to make around $500 on this trade. So when I click that buy button, you can exactly see how much you'll be making and how much you'll be losing before even you enter this trade, by the way. So now if I click on that buy button, you can clearly see as the price goes through, and if it hits the target, it's going to immediately sell it for you. You don't even have to do anything else apart from that. All right. So you can see that's $530, and you're done for the day altogether. And it's all automated. You just need to click on the buy by setting the stop loss and the profit taking targets, and the rest it'll take care of itself. Stop loss gets hit every single time. You don't have to worry about it blowing through a stop loss or blowing past your stop loss. Profit taking targets get hit all the time. So as long as you have both set, you don't have to worry about anything else. All right, so this is for NASDAQ futures. So you can see like how simple it is compared to that of you trading the same with options, right? So it's trading the same with options. Well, you have to look into a lot of things and a lot of nonsense right there. But I'm not saying options doesn't have its advantages, but futures simplify it by a great extent overall. All right, so are we clear on how things work? Especially when it comes to futures in general, because these two will be the only thing which you'll be trading a lot, by the way. I don't want to go over oil or gold at the moment, just because of what's happening with the Middle East and all the war which has been happening. All these three are way too volatile at the moment for you to even consider touching to take a trade on. All right, so most of the time you will be trading or cycling between these two only. So if you're someone who only trades SPY, or if you're someone who only trades QQQ, these two will just do the work just fine for you. So these are the utmost basics, by the way, utmost basics of the futures. So this is what I want you guys to do this evening. All right. So I want you to don't fund your account yet. Don't put any money into the account and get into the mindset of I'm going to trade this Monday with the futures. No. The first thing to do is start a TradeAway account. All right. So go to TradeAway and then open an account over there, or go to Ninja Trader and open an account over there. Just sign up. Don't add any funds yet. Just sign up with this one. And then you should be getting the access to something called as demo trading account there if you use TradeAway. All right, so get your access to the demo trading account and paper trade the demo trading account for a while until you get a hang of TradeAway in general. All right, so until you get a hang of TradeAway, go to TradeAway's website, open the account, and then enable your access to a demo trading account or a paper trading account, by the way. So this paper trading account's value, they're going to initially give you $1 million in paper trading account, and you're not going to be trading with $1 million. So let's say you're planning on trading with $2,000, right? If you're planning on trading with $2,000, I want you to change the paper trading account's value to $2,000 as well. And you're only going to be trading MNQ or MES, which is the micro version of QQQ and SPY. All right, these two are the only things which you are going to be trading with. All right, so initially, I would highly recommend you guys picking a time slot. Like right here, you have multiple time slots which was given to you, right? Where is it? Where is it? Where is it? There we go. So these are the time slots right here in the middle of your screen. So pick one time slot. It can be either from 8 p.m. all the way to like 10 p.m., 2 hours a day. Or it can be 3 a.m. in the morning all the way to like 5 a.m. Or it can be 4 a.m. in the morning all the way to like 6 a.m. Pick a 2 hour time slot and then stick to that 2 hour time slot only. Or some traders don't like to trade the overnight sessions at all. So what they typically do is they wait for the US market open and then trade that 9:30 a.m. EST candle. From 9:30, they'll start and they'll stop their trading by 10:30 or 11:30 in the morning.
Myra, can you do me a favor? Can you show me how to set the VWAP? Or is it set from the last candle for the day
On the
or
futures?
before we start? Yes.
Okay, we'll walk through it. I'll walk you guys through it through the trading view. All right, so
Okay.
we'll talk about the technicals in a bit. So now, before we get to the technicals, though, as I was saying earlier, pick a time slot and then stick to that time slot and hammer the time slot over and over and over again. All right, so this is for demo trading. And once you get comfortable with demo trading, this is when you move to the prop firms and give it a go. Just test your skills on how things are working out for you with the futures. If you can pass the prop firm challenge and if you start taking payouts from the prop firm, use that payout to fund your live accounts. You should be good to go from there on. All right, so now if you're using TradingView, just go to the symbol search and then type MNQ in there. You're going to see the NASDAQ's futures right there. But sometimes if this is your first time looking at the sticker symbol, right here where my cursor is, you're going to see a small yellow D icon, which will be present there for you. If you see that D icon in there, that's just telling you your data is delayed by 15 minutes. You need to buy the real-time data, by the way. So if you go to your profile right here and scroll down a little, not your profile, hold on, settings and billings, subscriptions, where is it? There you go. So if you go to subscription and then look into it right here, you're going to see all the data, all the real-time data, which is available right here for you, by the way. So you have to go to the settings, go to the billings and enable real-time data. And when you get there, you need to enable the real-time data for CME Group futures, by the way. So that is going to give you the real-time data for NASDAQ, real-time data for S&P 500, and all those other stuffs which you're looking to. The subscription is going to run you around $7 a month. So it's pretty reasonable. It used to be 4 before, and now they increased it to 7, but it's still worth it. All right, for $7 a month, you're getting access to real-time data. I would highly recommend getting it. You don't have to pay for TradingView to get the subscription, by the way, to the CME for the real-time data. So you can look into it. If you see a small D-like icon in there, which you most likely will if you haven't traded futures before, if you do get that, this is how you get that real-time data. Go to the settings, click on the small bubble on the top right corner, go there, and then settings and billing, and it's going to take you exactly to the subscription for the real-time data for trading. All right. So with that being said, let's talk about it's the strategy. We discussed it a bit yesterday. Now we're going to go over it again today. So the chart in front of you is MNQ. All right. Remember in when the market opens, we typically add the VWAP to the 9:30 a.m. candle, right? So in this case, how many of you in here use TradingView, by the way? We have 17 members in here. How many of you of this 17 use TradingView? Sandra, we got DJA with a reaction. Sweet also uses Okay, so majority of you in here use TradingView, all right? So now let's talk about it in detail a little bit on how you can take advantage of this one as well. All right, so let's just remove the replay as a whole. Let me remove all the indicators from the chart. So now, what time do the futures markets open? 6 p.m. EST, correct? So 6 p.m. EST is when the futures markets open up. So this is the entire Friday's price action, right? So until like what we got until Friday, yep, Friday evening. So this entire Thursday's price action as a whole, the Friday's price action, my bad. So right here, 18.00 is when the trading begins for this entire Friday. All right. So what do we do? If you want to anchor the VWAP, if you want to use anchored VWAP instead of regular VWAP indicators, right? Follow my cursor and go to the left-hand side corner of your screen, right? So count it, 1, 2, 3, 4, 5. The fifth option from the top, you're going to see a small arrow in here on the side, which says forecasting and measurement tools. Click on it, and you're going to see something called as anchored VWAP right there. When you press this little star on the side, you're going to see that anchored VWAP show up on the top of your screen right here. All right. So you just click on that anchored VWAP and then click on the candle at around 6 o'clock, which is the market open for that particular day. And boom, you got the VWAP for the entire today's session. All right, so you're going to be anchoring 2 VWAPs every day. So the VWAP 1 will be for 18.00, which is 6 p.m. EST. And the VWAP 2 will be at 9:30 a.m. EST, which is for the market open. So let's do the same. Let's click on the anchored VWAP again, and let's anchor another VWAP at 9:30 a.m. EST as well. So let me change the color so you can differentiate between those two a little bit clearer. So the white, which you see on the screen, is the VWAP from 9:30, and the orange, which you see on the screen, it's the VWAP from 6 o'clock candle. All right. So now if you look at it in hindsight, this is the 15-minute time frame. If I go to the 5 minutes, it's going to be even clearer. You can see how this VWAP has been acting throughout the overnight sessions, by the way. You can see like it gave multiple opportunities to take the trade off of VWAP alone, and then they chopped around for a bit, and then they completely gave up. And after the session opened, it was a clean cut, like just pushing through, pulling back, pushing through, pulling back, pushing through, pulling back. This is the day which you categorize mostly as a choppy mess, but since the volatility is a little bit higher, you saw a wider range overall. All right, so when a question is about how to set your VWAPs, these are the 2 VWAPs which I set every day. So when the next day when the market opens, just click on it, click on delete, remove it. And same with the 9:30, click on it, click on delete, remove it, and add the 2 new VWAPs for the next upcoming day. Let's say once a Sunday, the market opens at 6 o'clock. You add 1 VWAP at 6 o'clock at the open, and then you add another VWAP at the Monday morning at around 9:30 a.m. EST. All right, so hope you guys understood the basics on how things work when it comes to futures. So what we're going to do in tomorrow's same time session. Oh, DJ, go ahead. You don't have to raise your hand. You can just unmute yourself and ask your questions.
Yes, please, can you go over again the VWAP? I'm not seeing that symbol on the trading view that I have.
Oh, right. Like you see where my cursor is at the moment?
Yes.
1, 2, 3, 4, 5. You see the 5th option? You should see something different. So,
Yeah, I'm not
yeah.
seeing that on mine.
Yeah, you see a small arrow on the side. If you put your cursor a little bit to your right, you will see some small arrow pointing to the left, pointing to the right, my bad. Click on that arrow. You'll see the anchored VWAP right there.
Mine is a forecasting and a measurement tool.
Yes, click on that.
Okay.
and scroll down a little.
Okay,
You're gonna
okay,
see
I
it right
just
there.
saw it.
Yeah.
Okay.
So click on the star right next to it so that you'll see it in the middle of your screen, just like what I have on my screen right here. You'll see it in the middle. You can just click on it and then anchor the VWAP. So two things you need to do after clicking on the star. Do you see the anchored VWAP in the middle of your chart right there?
Yeah. Yes.
Click on that anchored VWAP and then
Mm.
select the 6 p.m. EST candle from Thursday. And you're going to get a nice little VWAP from there on. You click the anchored VWAP and then click the candle from 6 p.m. EST.
So Mario is always the VWAP is always for the day before, for the next day.
Oh, technically, that's when the day before is when the markets open for
So
us.
when, right?
Yeah, 6
Okay,
p.m.
no problem. Okay.
And Mario,
What
is
could
this is
Chris?
it that the margin is more with TradingView than TradeAvate?
No, margins are purely brokerage. TradingView is not a brokerage, by the way. TradingView is just a charting software, right? TradeAway
Oh,
is the brokerage. So you'll be doing the buying and selling through TradeAway. So the margins which they have in TradeAway is the cheapest in the market so far. If you're looking to trade futures with Robinhood, you can trade so, but you can't do that with the smaller sized accounts like $3,000 or $4,000.
so all you can do on TradingView is charting, no
Yes.
trading.
No. You can connect
Oh,
your TradeAway to TradingView, by the way. That you can do. For example, let me just log out of this paper trading account and let's just go to trade. So if you notice right here, you can log into your TradingView using your TradeAway account. So once you connect your TradeAway account to TradingView, you can just start trading directly from TradingView because it's connected to your TradeAway. So let's not complicate things for now. For now, just trade through TradeAway directly. You can just download the app and then trade it through the app directly. And I'll walk you through how to connect it and all that in tomorrow's class. All right. So are we clear on the basics though? So that's what we're going to be hammering on. Like if you understand the basics, the next thing we're going to be discussing is some strategies, right? Some entry strategies and how you can set your stop loss, like what's some rules which you need to follow and all this other stuff. So because in the poll which I ran, some people said Friday evening and some people said Saturday evening. So this is the phase one of the class. On the phase two, which is tomorrow, 6 p.m. EST, what we're going to be talking about is number one, we're going to be discussing how some entry strategies which you can follow, some setups which you can follow to take the trades on a repeated basis over and over and over again. And number two, what we're going to talk about is risk management and what are some downsides when it comes to trading futures compared to that of trading options in general. And from a psychological standpoint, what are some hurdles you might run into? So we're going to discuss all these into tomorrow's class. So this meeting is recorded, of course. What I'm going to do is once the processing is finished, I'm going to upload it to you guys so that you can go back, look back into it. And, but when you look back, if you find any questions, you can always reach out to me. And if you have any other questions now, you can feel free to ask. We're more than
Yes.
happy to help. Go ahead, TJ.
Yes. I see that your view will be just one line that I'm seeing it.
Yeah. Just double
That
press.
click on mine is three.
Yeah, double press on that VWAP. So you're going to get the settings. Just make sure, go to style up top. Make
Okay.
sure your settings are matching what I have in mind.
Okay, price label. Okay. Only the price that is labeled. Okay.
Yeah, other than that, disable everything.
Can you
So
review how you select the candle again?
Oh, for the VWAP?
Yes.
All right, so let me just delete it. It's simple. Click on that anchored VWAP first. All right, and then search for that 6 o'clock candle, 6 p.m. EST candle. And
Will it
then
always be the 6 p.m.?
Yeah, it should be at the 6 p.m. EST because that's when the futures markets open.
Okay.
All right. You
Yeah.
can anchor it any candle you want, but 6 p.m. is preferable because you need to make sure what the buyers and sellers are doing for that particular session overall.
And this is for which session again?
But this is for Fridays. Today's session, this is because today's session we open from Thursday evening 6 o'clock and it goes on all the way to Friday evening 5 o'clock. That is Friday's session in general.
Okay. Yeah. Thank you.
All right. So once you click on that anchored VWAP, click on that 6 o'clock candle again, you're going to see that anchored VWAP pop up. If you see 3 lines instead of just one, double press on that VWAP, double click on that VWAP, make sure your settings match mine. I'm going to leave the settings here for your reference. You can just make sure your settings looks exactly like mine. So you're going to see the VWAP exactly as what I see in my screen. You should be disabling everything but the price label, by the way. Everything else should be disabled. All right, you guys got it? All righty, perfect. So tomorrow, what we're going to be doing is we're going to be talking about how to use this anchored VWAP, number one. And we're also going to incorporate ORBs, the one which we incorporated in SPY and QQQ. We're going to incorporate the same when it comes to futures as well. And we're going to combine this ORB and VWAP and then come up with a strategy for entries and exits and stop losses. And that is what we're going to be doing in tomorrow, 6 p.m. EST class. All right. So again, if you want to talk in depth about it, you can always book a one-on-one. And I do have time for next weekend. I'll have some slots open. Feel free to do so. Use the checkout code DAD to get 40% off as always. Have a great rest of the day. Same time tomorrow, 6 p.m. EST for entries and exits. And we will discuss about prop firms as well and how to open accounts using prop firms.
Thank you, Mario. Thank you.
Thank you,
See
Mario.
you tomorrow.
Thank you,
Thank you
Mario.
so much.
No problem.
Thank you.
All right. So I'll
Have
see
a
you
good
guys
weekend.
tomorrow. Yep. You as well. Take care. Bye-bye.
Bye-bye.